I'm Reagan. I'm the numbers witch. Welcome to my channel. If you're new here, welcome. If you have been watching any or all of my videos, welcome back. So lovely to have you. I realize that maybe I need to be a little more weird on YouTube than I am on other places. Weird and quirky and cringe, because maybe some people like that. I don't know. I feel a lot of resistance to doing things that way. But we're just going to try a little bit because I'm a weird person. And so I'm maybe just going to be a little bit more of myself than buttoned up, starched up accountant. Not that I've been trying to do that. Yeah, that's just not who I am. I'm in my Grateful Head pizza oven tie-dye t-shirt. I don't have a fucking recording studio. And so this is how we're doing it. So I'm Reagan. I'm an advanced certified QuickBooks Online Pro Advisor. I am a virtual bookkeeper. I'm the numbers witch. I own my own bookkeeping firm that I founded in 2022. My cat is now rubbing against the tripod, so if you see any shaking, okay. So I help people who are not accountants understand accounting. I make small business bookkeeping relatable for many business owners who really struggle to relate to their business finances. If you know what a profit and loss statement is, but not necessarily how to read it, then you're in the right place. If you at all are a witchy or woo person, you're in the right place. So today's video is going to be about the basics of cash flow. And I've done 2 podcast episodes about this as well. And if you are not subscribed to my free weekly podcast, Money Through Ease, go do that right now. And subscribe, leave a rating and review. Also like this video, subscribe here on YouTube. Leave me a comment telling me who you are and what kind of business you have. And subscribe to my free weekly newsletter that comes out via email to stay up to date with all the ways that I can support you and your small business. Now that we've got all that out of the way, let's talk about the basics of cash flow and why it's important to understand what the cash flow is in your business, how to calculate it, how to find it. So let's start by defining cash flow. And cash flow, if we were to think about a bucket, and the bucket being your business, and water in the bucket being the cash in your business, we have water entering, or an inflow of water or money to your business, and that is your cash inflow. If you are pouring water into your bucket, that is cash inflow. If you have a hole drilled in the bottom of your bucket, that is cash outflow, because water is allowed to flow out of your bucket at a certain rate, depending on how big the bucket is, how much water is. I also have a physics degree, so I can tend to go off on some of these like sciencey tangents, so I'm going to try not to do that. Keep it simple, bucket, water. Cash flow is just describing how money moves in and out of your business. That's all it is. And it's really important that we understand cash flow in our business. This is one of the reports that I send to my clients on a monthly basis whenever I do the bookkeeping for them. And I want them to look at it. Maybe not necessarily every month, but you should probably look at your cash flow on like a quarterly basis at minimum. Definitely an annual basis for sure. Now, there is a difference between cash flow and profit, and you might be confused about that. So let's also define what profit is. Profit, if you are a sole member LLC, sole proprietor, side hustler, you're not incorporated, your profit is your revenue, business revenue, what people pay you for your products and services, minus your operating expenses, the things that you have to pay in order to have a business and to keep it operating. Your profit is what is left over. You can have a positive profit, meaning that you have had more revenue than expenses. You can also have a negative profit, which is what we would call a loss. And the loss means that you've had more expenses than revenue for that time period. Profit is not the same thing as cash flow, and here's why. Your profit does not take into account loan payments that you make. If you have business loans or credit cards, profit does not take into account what you take for your owner's pay, which if you're a single member LLC or a sole proprietor in your business, you're not incorporated, you are taking what's called an owner's draw, where you just transfer money from your business account to your personal account. That's your owner's draw. That's how you get paid as a small business owner until you become incorporated. So your profit does not take into account what you pay yourself with your owner's draws. Profit also does not take into account asset purchases or sales. So if you buy a car or a piece of equipment for your business and you list that as an asset, that doesn't affect your bottom line. It does not affect your profit at all. If you finance something, the payments that you make on that financing, on that loan, do not affect your profit. The payments of the principal of the loan are not an expense. You can have the interest that you pay on the loan as a business expense, and the interest payments show up on your profit and loss. The interest affects the profit of your business, but not the loan payments. And a lot of people get that mixed up. So profit is very limited in what we're looking at in terms of your business numbers. You've got your revenue and you've got your expenses, and that's pretty much it when it comes to profit. In the simplest of terms, your cash flow takes into account every way that money moves in and out of your business. So that does include your owner's pay, your equity, dividends to shareholders if you are incorporated, loan payments, credit card payments, purchases of assets, sales of assets. Cash flow gives us a much bigger picture of what's going on with your business finances than just your profit and loss statement alone. That's why they're different, and that's why you should look at both. Both are very important. The profit and loss is really important when it comes to tax planning, making estimated payments, things like that. And the cash flow statement is really important to know whether or not you're burning through cash in your business. More on that later. Here are the three main components of cash flow. Number one, operating. What you need to operate your business, how your business operates, how you make money. Mostly overhead costs. Rent, utilities, the phone bill, software, supplies, cost of goods. If you have to purchase materials that you use to create your product, that would be cost of goods. Those are all operating expenses, just the general day-to-day, what it takes to keep your business open. Operating also includes the revenue that you make in your business. Your business operations create revenue, hopefully. And that is part of the operating part of your cash flow, or the operating component of your cash flow. The second component to your cash flow is investing. Now, this is usually money that is invested into the business by its owner when you're a single member LLC or a sole proprietor, or maybe shareholder contributions if you are incorporated. Investing into the business could also mean taking the profit of what's left over, the retained earnings in your business, and reinvesting them, purchasing more equipment, growing your workforce, et cetera, et cetera. So if you are reinvesting money into your business or you're investing your personal funds into your business, that is one component of your cash flow number. And finally, the third main component of your cash flow is financing. That means if you take out a loan, the loan disbursement, that's an increase to your cash flow. You suddenly have a lot more cash when you take out a loan than you did before you took out the loan. That's cash flow. When you are paying off that loan, that's also cash flow. When you have monthly payments to make to pay back the principal and interest of a loan, that is cash flow. Most business owners finance a vehicle or a piece of equipment, or you might get a business line of credit in order to increase your cash flow so that you can expand your workforce or purchase materials and supplies that you use to create your products. Financing is one way that we both increase and decrease our cash flow. Financing can be both inflow and outflow. Here are some examples of the ways cash flows into your business. Number one is revenue. Hopefully, you're making money in your business. Hopefully people are paying you for your products or for the service that you're providing to them, or access to whatever thing you've got going on. Another way that cash flows into your business is through investing. You can have other people invest into your business. You yourself invest personal funds into your business to even open the business to begin with. That's the case for most people, having to invest personal funds, personal capital really, into the business to even get it started. You're using materials and supplies you already have, or you use personal money to buy the materials and supplies that you need to start your business. Financing, like we talked about, you take out a loan, that's a big cash inflow to your business. Well, depending on how big the loan is, I guess. But financing is one way that cash flows into our business. One less frequent way I see cash flowing into people's businesses is through sale of an asset. So if you had a piece of equipment that you were using for your business and you decided to upgrade it and get a better piece of equipment and you sold off the old piece of equipment, you would get money for it, right? If you had financed the old piece of equipment, whatever proceeds from the sale of that old equipment would go to pay off the finance, the loan, right? But if you owned a piece of equipment outright and it was an asset to your business and then you sold it, you would not have that asset in your business anymore, but you'd have more cash than you did before you sold the piece of equipment. So that is a way that cash flows into your business, selling an asset. Now I want to talk about some strategies to get your cash flow up if you need to do that. Improving cash inflows starts with making sure that people pay you on time consistently. If you send out invoices and people pay you via invoicing through an accounts receivable, meaning there's a time period between when you send the invoice, when you ask for the money, and when somebody pays you. There's a gap, right? That means that you have an accounts receivable balance. If I do something for somebody that costs $50 and they don't pay me for the next 10 days, that 10 days I have a balance of $50 in my accounts receivable because I'm waiting on that money to come in. And so staying on top of your invoicing, sending it out consistently on time, having good payment terms and agreements and engagements with people so that they know the terms of when they're supposed to pay and how can help you increase your cash flow. And honestly, that's one of the biggest reasons that I see people have bad cash flow. They do not stay up to date on their invoicing. They don't do it consistently, or it's incorrect, or they've forgotten about it completely. Staying on top of making sure that people pay you according to the terms and agreements that y'all set up when you first engaged, super important to your cash flow. Obviously, one way to increase your cash flow is to sell more. And I know that that's easier said than done. And I'm not a selling coach or whatever. I talk about money management, and part of that is you need to make sales. You need to have people who want to pay you money for your products or for your services. And if you don't know how to do that, business is going to be pretty tough. Cash flow will not be great if you're not good at selling. So get better at selling. I can recommend somebody if you need. That's Kelly Lynn Jewell. She's my sales coach, has taught me a lot about selling ethically and sustainably, which is really important when you want to have consistent cash flow in your business. Being able to sell, being able to not convince people to buy your thing, not to convert their no into a yes, but letting people know that you even have an offer to begin with and what problem it solves and where they can go fucking press the button to add to cart and pay you. That's all selling is. So if you need to increase your cash flow, well, personally, that's where I like to start. All right, I need a little bit of extra cash in my business right now. I'm going to go sell. I'm going to have an actual conversation with somebody about the offers that I have, what problems they're experiencing, and how I can help them. Go sell more if you need to increase your cash flow. It's simple. It's easier said than done, but it's simple. Also, we need to diversify your business revenue. And that could mean a lot of things to a lot of different people. But I don't know anybody that just has one offer for their business and who is successful with just selling one offer. Now, in the beginning of your business, you definitely want to simplify and not overcomplicate your sales process, not overcomplicate your business, your bookkeeping, none of that. Like, keep it simple, but it's probably a good idea to have like a range of offers or a range of price levels that people can pay you for your expertise, for the products that you are selling. So if you have one product or you've got one service and you're having trouble selling, consider diversifying your revenue. If you are having trouble with cash flow, maybe think about diversifying your revenue a little bit. Maybe even offer a bonus or a discount or a limited time offer or something like that. Play around with it. Have fun. Experiment a little bit. You'll be surprised at what people need and how you can serve them. And the only way you're going to figure that out is if you just try some stuff. Don't try it all at once, one at a time, and give whatever you try time to actually work for you and for your business. And once again, not a selling coach. I'm just sharing with you the things that have helped me. But diversifying my revenue, allowing people who maybe don't have the money to hire a monthly bookkeeper and to pay my fee for monthly bookkeeping, still giving them access to me, still giving them resources, even for free. Like I do this YouTube channel, I do the podcast so that people can have free things that are helpful and resourceful for them to be successful in their business. And then I have this stuff where somebody's like, I've got the money, can you just do it for me already? And having that range of offers has really helped diversify the way I make money. It's allowed me to put the gas on this offer or to put the brake on this offer and to diversify things, play around a little bit. And that has come because I've had good cash flow, but it can also be the way that you increase your cash flow is learning how to sell different things, learning how to diversify your revenue to provide sales and service that meet a variety of people and a variety of needs. But don't overcomplicate it. Maybe stick to like 3 offers, maybe. Now let's talk about cash flowing out of your business. I prefer to focus on the way cash flows into my business. I prefer to focus more on selling and making more money rather than cutting expenses and spending less money. I would rather just make more money. That sounds like a lot more fun, and it actually kind of sounds easier to not have to cut expenses and constrain my budget. So let's talk about the way cash flows out of your business. It's still important to talk about. So outflow can look like a couple of different things. Once again, we have operating expenses. So operations cash flow is either money coming in or money going out, business revenue or business expenses. And outflow is the business expenses. These are your operating costs, what it costs to make sure that your business stays open. What does it take to even turn on the lights and open the door and start selling in your business? Those are your cash outflows. Again, loan payments. When you're paying back the principal and interest of a loan, that is cash flowing out of your business. Now, we talked about the fact that the loan payments, the principal payments on the loan, are not going to show up on your profit and loss report. That's because they're not an expense. But just because something's not an expense doesn't mean that it's not still cash flowing out of your business. Loan payments, paying back a loan, is cash leaving your business, point blank period. Once again, taking your owner's draw. If you're a sole proprietor, single member LLC, you're not incorporated, you pay yourself by just transferring money from your business to your personal checking account. That's it. It's pretty simple, but it is cash leaving your business. It is an outflow. There's also tax obligations. And whether or not you have employees on payroll, all businesses must pay cash on their earnings in one way or another. If you do have employees on payroll, you have payroll tax liabilities simply by having employees. All employees need to have FICA taxes withheld from their paychecks, whether or not they have federal withholding. So you might have payroll tax liabilities. You might have sales tax, which means usually if you're selling a product, you need to charge sales tax, and your customers pay sales tax if they are the end user of the product they're purchasing from you. And if you are a sole proprietor or single member LLC, we talked about this before, but you pay taxes on the profit from your business because you're considered a disregarded entity. According to the IRS, your business exists, but it doesn't exist. It exists, but it's just you. You're just the business. And so you claim the business's profit or loss as income or a reduction of income, respectively, on your individual taxes. So you might have a tax obligation when you become a business owner. Even if you're doing a side hustle, if you are making bank and you've got a big profit, you're probably going to have to owe taxes depending on what else you got going on in terms of tax withholdings, whether or not you make quarterly estimated payments. And this video is not about that. But tax obligations are a way that your business has money flowing out of it. Sales tax, payroll taxes, individual business owner taxes. Now, one of the ways that we could improve your cash outflows obviously would be reducing how much money is flowing out of your business. The first thing that we look at probably would be your operating expenses. Are there things that you're paying for on a regular basis that you don't use, you don't need, it's not even a necessity, you never use it, you don't like using it, and you're still paying for it? let's take a look at those, because that could be one way that we kind of cut off the flow of money out of your business. If you are selling products, it's a good idea to review who your suppliers are, who your vendors are that you purchase supplies and materials to make your products from. It's a great idea to look at them from time to time to see if you can buy equal product, better product somewhere else for equal amount of money or even less money. You don't necessarily want to have a worse product or supplier, right? Like that just doesn't make sense. But there might be something different out there that is less expensive that you might want to consider changing to have less money flowing out of your business. And finally, one of the ways that you might reduce the amount of money flowing out of your business is by refinancing or consolidating loans. Now, I am not like giving credit advice or loan advice or anything. That's not what I'm here for. But it is possible that you could refinance a loan and have a lower monthly payment, which in turn means less cash flowing out of your business each month. Or you could consolidate loans and pay the same amount each month and have a better interest rate, meaning that you pay off those loans faster. And when you pay off a loan, now all of a sudden you're keeping that loan payment in your business. It's not flowing out of your business each month. So you can refinance to get a better interest rate. You can lower your monthly payments. You can consolidate loans. You can pay them off faster. So looking at your business's debts and seeing if there's something to be changed there, if there's some benefit that you can get out of refinancing or consolidating, might be a good idea for you to do that, to pay them off faster, to reduce your monthly payment, and in turn mean that more cash is staying in your business each month than flowing out. And now I want to define 2 different terms that you should be familiar with and point you to a freebie that I have when you get on my email list. So signing up for my weekly newsletter will also send you a couple of amazing free resources that I have created for small business owners to be a little bit more empowered and a little bit more literate about their finances and their money. And that would be the burn rate calculator and the cash runway. Now, these are 2 terms that every business owner should be familiar with, but we're not going to hang up the success of our business on either of these terms. Burn rate is how fast you burn through cash in your business. It is literally the rate at which money leaves your business, if it does at all. Some people have a cash surplus every month, in which case your burn rate is like infinite. You are keeping cash every month. You're not burning through it. You're not burning through it faster than you can keep the cash, basically. And then your cash runway is like if you were trying to take off in a plane and you have to have so much runway in front of you in order to sustain the takeoff, sustain your business. And the cash runway and burn rate calculator are going to let you know if you have that much time left at the rate that you're burning through cash. And I don't want to go too much into how all of that works, because when you download the calculator spreadsheet that I send to you on my newsletter, you'll understand. You will quickly be able to plug in a couple of numbers, just a couple of numbers, and find out what your burn rate is. And here's the thing. I want to caution you against using that to determine whether or not you should close your business, because I don't think that's fair. I don't think it's fair to use a limited tool and resource like the burn rate calculator to decide whether or not to keep your business open. That's not what I want you to use it for. What it is going to give you is some information that you can then use to make a good decision for your business. And that could be doing any of the strategies that I listed earlier to help improve your cash flow or to reduce your cash outflow. All of this to say, if you want to know your cash flow and you really want to know your cash flow, the more details we can put into these calculators and into these formulas, the better, which means that you need to have a robust bookkeeping system to keep your business finances together. Yeah, we're going to end up there, aren't we? Bookkeeping is the way that we figure out truly whether your business is burning through cash or if you have a surplus of cash and you have infinite amount of time to run your business without ever running the bucket dry. Wouldn't that be amazing? Not the case for a lot of people, but It could happen. And you can learn my simple process for bookkeeping, get all of your data into one place, and be able to look at your cash flow accurately using the Bookkeeping Foundation Kit. This kit is a quick digital course that I created to help you start from nothing to going to a fully robust bookkeeping system where you can actually pull your financial reports and understand what's going on in your business. So grab the Bookkeeping Foundation Kit from the link in the show notes, or you can go to bookkeepingfoundationkit.com. It's $77. You'll have access to those materials forever, and you'll also get 30 days free access to my private virtual community with me and all of my clients. This is where I can provide even more support and resources to you, and you can come ask questions. I host virtual office hours and study halls over there. I do live Q&A and live content tutorials, and I take requests and feedback from the members of the community about what they want to learn. And that community subscription is either $7 a month, or you can get the kit for $77, have the kit forever, and get 30 days free access to the community. I really want to encourage you to come join us. It is an excellent, supportive, kind community with good accountability that is non-punitive. You are not going to be punished for not doing the work or doing it imperfectly. That's just not how we roll over there. So grab the Bookkeeping Foundation Kit from that link, and I simply cannot wait to meet you and hear about whether you're burning through cash in your business. Anyways, if you've watched this long, thanks so much for being here. It really means a lot to me, and I want you to like this video if you found something interesting or you learned something new. Leave me a comment letting me know what it was that you learned. Subscribe, turn on notifications, subscribe to the podcast, subscribe to the free weekly newsletter, and let me know how I can support you in your small business success. Thanks for watching.